Hello everyone. Today we're talking about REITs and how they're great long-term investments. And we've got 4 that are excellent investments long-term. And we're going to go jump right into the video. The first one we're going to talk about is Arbor REIT, ticker symbol ABR. Arbor REIT Trust is one of the most well-known and widely followed income-focused REITs in multifamily lending space. Unlike traditional landlords, ABR doesn't own apartment buildings, it finances them. Think of Arbor as the engine behind thousands of multifamily properties across the United States. They provide bridge loans and financing and structured debt solutions for developers and property owners who need capital to renovate, stabilize, or expand multifamily housing. What makes Arbor so appealing is many investors use its combination of high income potential with long-term demand for rental housing and experience navigating economic cycles. Multifamily housing remains one of the most resilient real estate sectors because people always need a place to live. Even during economic downturns, rental demand often stays strong and lenders like ABR continue to find opportunities. ABR has gained a reputation for delivering consistent dividends and maintaining a disciplined approach to managing its loan portfolio. This makes it a compelling foundation piece for anyone looking to build income in a real estate focused portfolio. I've been investing in this company since 2019. So this is a great dividend payer overall and great way to diversify your portfolio. So Arbor REIT is definitely a recommended stock. Next, we've got ticker symbol GOOD, Gladstone Commercial. Often known by its ticker GOOD, focuses on diversified net lease commercial real estate. Net lease means that tenant agrees to pay many of the property expenses such as taxes, insurance, and maintenance. For the investor, this creates a predictable cash flow and fewer surprises. GOOD invests in office and industrial properties across the United States with long-term leases to corporate tenants. Whether it's distribution facilities, manufacturing operations, or office campuses, these are properties leased to organizations that value stable long-term occupancy. One of the most attractive features of GOOD is that it pays a monthly dividend, not quarterly. For investors who appreciate frequent income, especially retirees or those building a dividend snowball, monthly distributions can make budgeting and reinvesting easier. GOOD also emphasizes credit quality and long-term tenant relationships. So Gladstone Commercial is also a great investment opportunity. So be sure to check that out. Number 3, we have New York Mortgage Trust, ticker symbol NYMT. New York Mortgage Trust, or NYMT, is a residential mortgage REIT that specializes in investing in residential loans, structured mortgage securities, and distressed or opportunistic housing assets. Mortgage REITs operate differently from equity REITs that own physical buildings. Instead of collecting rent, mortgage REITs earn income from interest on the loans and securities they hold. NYMT focuses on assets that support housing affordability and residential stability. These include single-family rental loans, multifamily private capital loans, and mortgage-backed securities. Residential mortgage REITs can be more sensitive to interest rates, but they offer a A few other things to consider is they offer great long-term strength because America's housing market and the exposure to residential credit. NYMT provides a clear and understandable path. It's important for investors to recognize that mortgage REITs require thoughtful risk awareness, but they also play an important role in the broader housing finance ecosystem. New York Mortgage Trust income potential is a big plus. Next, we have Dynex Capital, ticker symbol DX. Dynex Capital is another respected mortgage REIT with a long history of disciplined risk management. DX invests primarily in agency mortgage-backed securities and government-guaranteed loans, which tend to carry lower credit risk compared to private loans. This makes a more conservative option within the mortgage REIT landscape. Dynex is known for navigating interest rate cycles with a strategic approach, focusing on capital preservation and maintaining steady income for shareholders. The management team emphasizes transparency and prudence, which has helped DX build a reputation as one of the more stable mortgage REIT operators. For investors looking to balance higher risk mortgage REITs with a more consistent income stream, DX offers an educational example of how disciplined management can create long-term value. Another thing I'd like to add, every REIT that I've just mentioned has a positive EPS, and that's something that we at Josh Delozer Investments always pay attention to. You've got to have the fundamentals in order before investing in a stock. Personally, we don't recommend investing in something with a negative EPS. And since everyone stuck around, we're going to add a bonus. It's ticker symbol GLAD, Gladstone Capital. Gladstone Capital isn't a REIT, it's a BDC, or a business development company. BDCs exist to support small and mid-sized businesses by providing them loans and growth capital. In exchange, they pay high dividends to investors and other monthly income similar to GOOD, which is another ticker symbol on this list that we've already went over. GLAD focuses on private businesses that often don't have access to traditional bank financing. This means GLAD plays a meaningful role in supporting entrepreneurship and economic development. For investors, it provides exposure to a different asset class, private credit, while still offering consistent distributions. Adding GLAD to this group brings broader diversification. Thought we'd just include this because it's another high yield dividend investment. We go over these stocks real quick. We have multifamily lending with ABR, and with GOOD we have net lease commercial property. And for residential mortgage credit, we have ticker symbol NYMT, and ticker symbol DX covers agency-backed mortgage securities. And as we just mentioned, GLAD covers private credit income. So we have a little bit of diversification there, which is always important. You never want to put all your eggs in one basket. These are all high yield investments and great for the long term. If you're looking for something that pays a dividend consistently, these are great companies to choose from. Appreciate everyone watching the video this week. Please hit the like and subscribe, and we will make another video next week. If you have any comments or questions, feel free to leave in the comment section below, and we'll be more than happy to answer. We will see everyone back here next week. Have an amazing weekend.